What is going on, investors? Hopefully you guys had a great day out there. Tell you what, if you're a Nike shareholder, it is a great day. This company just reported their full year earnings, and after the bell, boom, it's like Michael Jordan dunking on Patrick Ewing. We're up 8%, 8% in the after hours. This is a $200 billion company that just gapped up from about $135 up to over $150 per share to all-time highs. In the after hours session, when we get over the stock chart, we'll talk about what that means. Now, what is driving that? That is because they just reported their Q4 earnings. We're going to jump into them. We're going to take a look at these. We're going to take a look at the revenue, the profit. Why is this stock absolutely exploding? Before we get into that, I do have to say that Nike is one of my largest holdings, and it is a stock that I've been holding for a very long time. One of the reasons why I do like Nike and I do hold Nike is because it's a powerful brand. And when you have a powerful brand, you can charge more. And we saw that in the quarter when that gross margins increased to 45.8%. The consensus was 43.8%. So they're able to charge more, and the customers and fans of Nike are willing to pay up. Now, the other thing that's interesting going on with Nike is that they do benefit the shareholders well. You've got these dividends. They've paid $1.6 billion worth of dividend. This is a dividend that grows year after year. We'll take a look at it. Okay, it's not a big dividend. It's $1.10 per share. You only get a yield of 0.83, but that's if you bought now. If you bought back when I bought this, I think it was like 4, maybe even close to 5% yield on this one. So you better believe I am feeling really good about my Nike shares from the dividend perspective and a capital appreciation as well. Now, what's also interesting is they're doing this buyback. So in the most recent quarter, they bought back, about $650 million, but they improved this $15 billion program in June of 2018. So that's a 4-year. It's going to run another year, maybe I would guess probably extended. Why do I say it's getting extended? Is because they've only, and I say only, repurchased 50 million shares at $4.7 billion. So they've only done a third of what they've been authorized to do. So my guess is this buyback will get extended as we move forward with Nike. We'll take a look at that in a minute. Now, let's take a look at the profit, okay? Because this is what is truly driving the stock up. We've got our 3 months ended here on these left-hand column. It's quarter over quarter. Right-hand column is last year. Left-hand column is the most recent quarter. Now, this was their fourth quarter, and so they got a 12-month view as well. Now, I tell you what, because of COVID, because of all the disruption that had with Nike's business, with a lot of their stores like a Foot Locker and Dick's Sporting Goods, things like that, being closed, well, the quarter over quarter numbers are looking fantastic. Take a look at the revenues here. Quarter over quarter, we went from $6.3 billion to $12 billion. That is nearly 100%, or more exact, 96% growth year over year on a quarterly basis. Now, from a year over year basis, we get a little bit more leveling out of that. We're up about 19% from 37.4 billion up to, we'll just round that up to $45 billion on that revenue side. Just fantastic. Okay. So that gives us our gross profit after we minus our cost of sales. In the most recent quarter, we grew 140%. So we grew our revenue 96%, but this is when we talked about this margin expansion. We're able to grow our gross profit 140% because they were able to charge more on increasing sales. Notice our gross profit went from 2.4 billion up to we'll call that $5.7 billion. Now, for the full year, doesn't paint as glorious a picture, but I tell you what, if this most recent quarter can continue, we can continue charging more and run less promotions on Jordans, Air Maxes, all the types of products people are enjoying from Nike. It paints a very, very good picture because take a look. For the full year, we still grew our gross profit 23%. That's because our gross margins went up as well by about 1.5 points on that one. So very, very nice. Now, they have some demand creation expenses. This is essentially marketing. This is sponsorships. This is all types of things. This grew 21% in the quarter, but notice in the full year, it actually went down. That is because demand creation didn't exist for some athletes, some events got canceled, in-person events, things that Nike would have normally sponsored or ran ads against. Well, those events didn't necessarily take place, so their marketing expense actually went down, okay? How incredible is that? Your revenues go up 19%, your gross profit goes up 23% for the year, and your marketing expense went down 13%. Just absolutely a winning combination. We've got operating and overhead expenses basically flat on a quarter-over-quarter basis, or a year-over-year basis, on a quarterly basis. We are seeing this type of expense continue to go up. So I absolutely would not expect that the next fiscal year will reduce our marketing spend at all. In fact, I would expect it to grow significantly, at least compared to a negative 13% over the last year. That was pandemic related, kind of a one-time thing. So we come down here, we've got a little bit of interest expense, some taxes that we got to pay. We come down here to net income. Oh, that went from a negative. So last year at this time, they lost $800 million. I remember doing that video here on the channel. And now they made $1.5 billion for the full year. Paints a similar story. We went from $2.5 billion last year. I thought that was probably pretty good. Now we're all the way up to $5.7 billion. That is on a diluted share basis, $3.50 per share. You've got a dividend rate here of $1.10. $1.10 per share for the whole year, and they're earning $3.56 per share on a diluted basis. Tell you what, this dividend is going to go up, and it is going to go up again and again and again if Nike can continue these types of results. Now, the balance sheet, talked about their buyback. Okay, they've authorized this $15 billion buyback. It looks like they've got, we'll call it $10 billion left on that. They got about $10 billion sitting here in cash. They've got another short-term investment here, about 3.5 blended together. That's about $13 billion worth of cash. You got another 4.5 in receivables. Receivables are up big time. Probably, my guess is because you had customers like Foot Locker and the sporting goods stores out there. Well, they didn't need a lot of receivables, okay? They were probably turning inventory away. Well, now they are taking inventory and they owe Nike money essentially, and so that's why these accounts receivables has gone up. Now, what I do like is that inventory is actually down. Okay, we actually went from 7.3 to 6.8 billion. It's just showing you that Nike might be getting and this may not be what's happening, but from a high level view, it shows me Nike's probably being very efficient in the type of inventory that they are having. Because I tell you what, if inventory went down and our sales went down, that is going to show me that the company is maybe not managing demand very well. But their sales are up, they're able to charge more, and they're not keeping as much inventory on the books. And so I like that combination. The CFO is doing a very nice job over at Nike. We got total assets here up about 20% year over year. Liability side, we do have some long-term debt, but that is basically flat year over year. Our liabilities up as well, just marginally. All things being considered, this is looking absolutely fantastic to me on the balance sheet side. Now, here's where it gets interesting with Nike. Okay, we get to look at all their different divisions. Now, what I will say is for the 3 months here, we're just seeing incredible growth. Look here in North America. It just shows you the impact that the virus had on this company. Take a look at footwear, up 136%. Apparel, 157%. Equipment, 134%. There was a ton of people that just delayed buying this stuff, okay? And so this is evidence that this is not necessarily, I wouldn't call this necessarily a one-time thing, but we're definitely not going to see this on a quarterly over a quarter basis, probably heading into next year and the following year. We're not going to see this type of growth. Okay, look, Europe, Middle East, Africa, same type of growth. What's interesting is China was at this time last year was already kind of turning the corner, at least in terms of reopening and those types of things. So their numbers look a little bit more normalized. So what I want to do is focus here on the year over year. We're still seeing 25% growth in footwear, which is Nike's bread and butter. Look at this. They did $11.6 billion in footwear just here in North America. That is bigger than the total of all of Europe, Middle East, and Africa. That is bigger than all of China, and that is bigger than all of APAC as well. So this footwear business is just absolutely on fire, and it grew another 25% here in North America. Everything else looks very nice. From a China perspective, I think legitimately that's what a lot of people look at with Nike. Okay, we're sitting at 8.2 billion. Here's Greater China. Here's our total revenues here. We got $8.2 billion on that revenue side. Okay, we're still half of the United States. So I think that also has investors excited with Nike because China is just a gigantic market, much bigger than North America potentially. And you're still sitting at just 50% of those revenue totals. That's got Nike licking its lips. Now, what I wanted to show you down here as well is we have sales through Nike Direct. So this is like their Nike.com and those types of things in the different apps. We're seeing that grow about in the mid 30s or low 30% as well. The last thing that I want to show you is here's our earnings before interest and taxes. This is often abbreviated EBIT. You also see EBITDA and some other, forms of accounting. This is EBIT, so earnings before interest and taxes. It does give you kind of a window into the profitability of the business before they have to pay some interest and some taxes, which can vary depending on where the company is operating and the effective tax rates at those given times. We see here in North America for the 12-month, solid $5 billion. Here's what I want to focus on, okay? Here's Greater China. We talked about it from a revenue perspective, that it was still 50% of North America, but look, on an earnings basis, it's actually a little bit less than 50%, okay? And we went from 2.5 up to 3.2. I think potentially, especially if you're thinking long-term, that this earnings is going to exceed North America at some point. This was a fantastic quarter for Nike in North America because there was so much pent-up demand. Like there was so much pent-up demand for footwear, apparel, those types of things that it pulled forward a ton of that. I still think China is going to be its biggest opportunity, not only from a sales basis, from a profit perspective. So there's a lot of runway left. And so when we come over to the stock chart, look, this thing has been on a monster run. So this thing, after the pandemic hit, was down at $60 per share, and we're sitting right now at $149 per share. Now, we've waved sideways, okay, like a lot of stocks. I just did a video on FedEx, but you can look at the Facebook chart, you can look at Apple, you can look at Amazon, you can look at Netflix, you can look at Microsoft, you can look at a lot of stocks. A lot of them have made this similar move, made a rocket up move, and then started to take a breather. There's absolutely nothing wrong with that. Now, I tell you what, if you got me in here looking at Nike's chart yesterday, I would have been like, oh, I'm a little concerned. This is a high, lower high. We'll call that flat, but lower, up, lower, lower. This is looking kind of weak to me, but we took that basketball and Zion Williams did a windmill slam right in Luka's face. He's way up here at $149 per share. So we broke these all-time highs and now we're up here. Two things happen when you break up into these levels. So one thing that can happen is you can just run. And I don't know how high it can run. Infinity is possible, I guess, but we all know that that's not likely. But we could run and we could run hard. But more than likely, what's going to happen is Nike's going to make a run. It's going to come back down here and test 149. So two things you can do. You can play the momentum and say, hey, I want to jump in here on Friday or Monday or whatever it is, buy at 149, hope we pop up here. Any sign of weakness, I'm out. So if you want to play a shorter term trade, if you're like me, you already own Nike shares, I wouldn't necessarily say that is the time to buy. What I think you could do, wait for this one to pop, wait for it to pull back, retest 149. That could be an area where you could get in. If we break 149, there's a lot of airspace. We created this big, gigantic gap right here, okay, from 135 to 149. If you watch the channel, you watch enough charts, you know that these gaps like to be filled. Look at the last time we had a gap, okay? We had a gap right here, same gap. Could have been earnings. This was back in, looks like October of last year. We created this big gap. Well, what happened? The stock ran up into a level of resistance, and then it came down and almost filled the gap perfectly. Not quite, okay? The bottom of this candle almost filled this gap. But when you make these gaps, okay, it doesn't happen every time, okay? We have a little gap back here. That has never been filled, okay? But what you often do when you have these gaps, it runs and then pulls back, okay? You had a gap here. It runs up, pulls back. Same thing's going to happen here with Nike, more than likely. Okay, you've gapped up here. It'll probably run a little bit over the next days, weeks ahead, and it'll pull back. And those are the times when I'd make a decision. But in my opinion, Nike is a long-term buy and hold. Number of different reasons. Number one, it's a powerful brand. We saw evidence of that they were able to charge more this quarter and just have fantastic sales in North America as you have people coming back, buying clothes for the first time, maybe in a year or so. Okay, everybody's been just camping out at their house, hadn't needed a new pair of shoes, necessarily needed a new pair of, workout gear, new pair of Jordans, whatever it is. Well, those people came back in droves, and so it shows you the power of their brand and the power of their pricing. So that's one reason why I absolutely love Nike. They are a gold medal winner when it comes to sportswear. Okay, I don't like silver medals. I don't like bronze medals. Okay, if I went to the Olympics, I would take any medal I could get. But when it comes to investing, I only love gold medal winning companies. And I think we can all agree Nike is a gold medal winner. Everybody else, from Under Armour to Lululemon, Adidas, Reebok, everybody else is a silver medalist at best when it comes to competing against Nike. So I will take the gold medal winner every time. And the other reason why I love this stock is I got it a long time ago. I want to say I paid $40 or $50 per share. And when you're earning $1 on that, you're doing pretty good. And this dividend continues to grow. And I like this company for the long term, as you probably can understand already. So hopefully you guys enjoyed this video. We'll be back again with more tomorrow with our Fang Stock Recap Show and a Saturday macro show as well. Hopefully you guys have a great day. Good luck with your investments.